Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, July the 2nd. The year's 2020. Let's talk trading. NFP day. They moved it up a day early. I hope you were paying attention and saw that, because if you didn't, you may have gotten cut up today, or you may have decided to not trade at all because things looked a little bit different than normal. But anyway, I just want to make you aware that these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And as always, risk management. You don't want to lose more than on any one particular trade than you're willing to lose. That should be the first thing in your trading plan, is you decide how much you're willing to lose per trade. And the next thing is you got to get your head in the right place. Brain management. You can't fall into any of these traps. You don't want to experience pain and anguish when you're trading, because if you do, you're doing it to yourself. That's your reaction to the market. The market doesn't know about you. It doesn't care about you. The market's just out there. And I split up the screen. I've got the new money management screen here. And basically, you got to take your profit before the market takes it back. If the market smiles upon you and gives you an opportunity to take profit, make sure you exit that trade with a profit. It's just that simple. You know, there's many ways of trading and managing the money. You know, one method is, let's say you get up 5 pips. Well, maybe you take half your profit off the table and then you move your stop up to break even or break even plus 1. But the fact of the matter is, you took some of that profit, you locked it in. So the worst thing that happens is that the rest of your position gets stopped out at break even. Now, the thing is, if you do this, you'll feel, well, hey, you know what? At least I got some of the profit. And then again, if it takes off and goes to 10, 20, 30 pips, you might go, well, hey, at least, you know, I still have some of that. I'm still getting part of that action. So it kind of puts you in a win-win. You won't have any of those brain management problems. Like, you won't regret getting out. You go, well, you know, I should have left it all in there. No, you did. You followed your plan. You locked in some of that profit, because if it would have went the other way, you would have been saying, you might have said something like, oh, I should have taken it all off. Well, if you do that, you're just going to put yourself in a tailspin. If all you do is look at what you did wrong, look at what you did right. And what you did right was you locked in some of that profit, you let the rest ride and see what happens. Let the market do what the market's going to do. You know, the other way is you can move your stop up to break even plus 1 after you're up by 5 or more pips. You can just let that sucker ride and see what happens. I mean, that's possible too. But the thing is, you have to have a money management plan in place before you enter the trade. And now you can have different sets of money management. In fact, if you watch my exit playbook videos, you know, I talk about it. If the market's moving fast, you react one way. If the market's moving slow, you might react the other way. You know, if it's moving fast and it spikes up 10 pips, hey, you know what? I just punch out everything. I just got, yeah, that was MT4 talking to me. If it's moving slow, maybe you take 50% off and let it just keep moving along. So moving along, once again, gaps filled this week. And there was a trader who wanted to know how to do the gap fill. It's real simple. You don't need an indicator. You can just look at the weekly chart. If it gapped down, then you want to go long. If it gapped up, you want to go short. And you just want to make sure the spread's not ridiculous. Because if the spread's 20 and the gap is 10, you're not going to be able to take advantage of it. And that happens sometimes. But, maybe the following day it still hasn't filled the gap. And so in this case, say the pound had gone down and there's still that gap. Once you see it start to reverse, then you can start shooting for the gap. Okay, we have the first day of the month put in. As you can see, we broke out of that high and it's pulled back. And the first day of the week was here. And tomorrow's probably going to be a very, very thinly traded day. And we'll just have to see what happens then. But so far, you see we've got the first day of the week right here. For the month, we're up 76 pips so far. But right now, the daily open is, we're just 2 pips above it. And the range today, NFP day, is kind of light. That's really strange. And the inside bar traders, you see we broke through that inside bar from 13 weeks ago. Right now, we're right back to it. But let's see, the high was, 25.29. So it looks like that was good for at least 50 pips if you punch down at the top. Once again, NFP day, maybe it caught a lot of people off guard, but only 2 pairs over 100 of range, high minus low range. We're right back to the daily open, right around that psychological 24.75. And by the way, the 25.00 was a double psycho line. It was a double low, but then it was also 1.25. So I would call that a double psycho level. Pivot point was below the daily open, and maybe you took those triggers, but you can see here you've got rejected. Looks like once, twice. So if you did that buy zone trade, trying to fade the pivot, today you got your fingers burnt. But that's just the way it works sometimes. Sometimes you win, sometimes you lose. Rats, we have enough range here, and you can see the green rats feasted. Actually, the red rats feasted, then the green rats feasted, and the red rats feasted again. It looks like now it's the green rats' turn. And for those of you asking about the rat, this is basically one indicator here. And the rat does most of it, okay? And even though I have the smart rat zone, but I've got that one turned off, but most of what you see on the chart here, that's all from this one indicator. This is the multimeter, that's the B clock, but this is coming from the rat, and I think I gotta change something. I must have some comment in there, and this is all other indicators. But so the main thing here is all the rat. And you can watch my rat zone videos to understand how I developed the rat, why it works, how it works, and how you can use it. Because a lot of people are saying, well, you go through these charts, but you never explain. Yes, I have explained in other videos. If I explained every day, I wouldn't get past one chart. So I'm just giving you the highlights here, and you guys are going to have to get in there and watch the other videos. And if you have specific questions, I'm more than happy to answer. So, but you have to ask a specific question, not just how. And always, 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 if you're posting out there, post the chart so I can see what you see. Don't tell me it doesn't work. I have no idea what you're talking about. You have to tell me the exact indicator name, show me the chart, and don't just give me a little snippet. No, I want to see the entire chart, because there might be something up here or over here or down here that gives me a clue why it's not working for you. So all that information might not be important to you, but as a programmer, it's important to me. As a trader, it might not be, but as a programmer. So help me help you by showing me all of what you see. Okay, back to the point here, monthly pivot. We took it out yesterday. So now we might look to return to other levels. We took out the weekly pivot here. I called that out at the beginning of the week. Here's the daily pivot miss, 2 days in a row here for July. The weekly pivot, however, has been taken out. You can see we haven't missed the weekly since 2018. So those pivot trades, once again, usually pay off. Not always. But see, here's a perfect example. If you faded to the pivot, it didn't quite hit it, but you could have taken a profit. And it's even true today. Might be small profit, but you still could have taken a profit. Wick zone traders, you guys are smiling, in and out, just cutting through that wick zone. Price action traders, simple price action traders. Those of you who are just beginning to trade or have been struggling and been using squiggly lines and not making any money, welcome to simple price action trading. Okay, you've got the sweet spots indicator here. Sweet spots go, why is this so small? That I do. The version that I modified, and what it'll do is it'll put in what we call the Walmart lines. So in this particular case, price opened here. Green line buy, red line sell. You'll be trading with the H1 candle color. As you can see here, if you triggered short at 60, we had a low of 25, a low of 58.8. You probably may have stopped out, but then if you turned right around, reversed, you see you could have taken 10 pips. So if you had a 5 pip stop, you got stopped out. You turn around, took the next trade, you made up the loss and you're up 5 pips. Does it work that way every time? No. Your results may differ from mine. This video is for educational purposes only. But if we go back to the previous hour, once again, you would have been long at the line, possible 10 pips, out short at the line 10, 20, 30 plus pips. Candle before that, green at the line, red at the line. So does it work that way all the time? No. Sometimes you get stopped out. Sometimes you lose. But you can see here, more often than not, price hits the line with the candle color, gives you an opportunity to take 2, 3, 4, 5 pips. And now, if you're coming from squiggly land, it's the world of the squigglies, those, if you follow the trend and you can make hundreds of pips, if you come from there, but the reason you're coming from there is because you weren't making hundreds of pips. So rather than, looking to make hundreds of pips all in one trade, how about you make 2 to 5 pips per trade, and maybe you make 4 or 5 trades a day. So by the end of the week, you're looking at your 100 pips. Okay? That's how it works. But you have to work it. Somebody goes, what's your most profitable method? My answer always is methods aren't profitable. Traders are profitable. Because I can give this method to one trader and they lose. I give it to another trader, they win. Is it the method? No. Is it the teacher? No. Is it the trader? Yes. Simple stuff, traders. Boys, girls, non-binary traders, simple stuff. But you're going to say, well, if it's so easy, why isn't everybody? Why? No, I never said it was easy. I said it was simple, not the same. Okay, for the new people, it's very simple to lift weights. 5-pound weight, that's easy. 50-pound weight, a little more difficult, but still relatively easy. 500 pounds, mostly impossible for most people, okay? But it's the same thing, you're lifting weight. It's a simple process, not always easy. So trading's kind of the same way. If you've got some method that you've got squiggly lines up here and squiggly lines down here and a whole bunch of stuff on the screen, you're not going to be able to comprehend. We've got horizontal lines. We got an indicator saying, is it buying or selling? We got something where we can change the time frame or the pair, and that's it. So fellow traders, I'm going to sign off. Just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new, come down and click subscribe. TheRumpledOne signing out.